Manipulation legs are important in this market because they're gonna make you take better setups. So what a manipulation leg is it's basically just a let me draw it real quick. So it's basically just when we sweep some sort of sell side or buy side, whatever it may be, and we sweep it once, and you're always like, oh, the first setup I'm gonna take, I'm gonna long it. Let's say you see a fair value gap here and we sweep some sort of low. You're gonna be like, oh, I'm gonna long this. All right. And all of a sudden you get wrecked. And then we hit this low again and then we go up. This is called a manipulation leg, where you think it's a reversal, but in reality we go hit the low one more time. And I'm gonna be honest with you. This will not happen all the time. Sometimes we will not get a manipulation leg and we'll just go up. Now that means there's probably an SMT, which I taught you in the SMT video. But if there's not an SMT, so be it. This is gonna happen sometimes. But if you want to be smarter and wait for better trades, wait for like the low to sweep one more time after a big liquidity swept and then take the long. Okay. So let me show you some examples on the chart. All right. So right here in this example, see how we sweep this big low over here. Let me show you real quick. Okay. We actually don't. So in general, like down here, let's say you're banking off the idea that we've kind of swept these equal lows. We're very low now. We're in higher time frame discount. We're very low relative compared to where the market is. And you're like, oh, we're very low. And you're thinking, oh, I see a market structure shift here, right? And you're probably thinking, well, I'm going to long this fair value gap because we're probably going to go higher. And yeah, it does work. But let's say you miss that entry. Let's say you're like, oh, we got another bullish fair value gap. It looks bullish now. I'm going to long this fair value gap and go long. But this one fails. Well, why does it fail? Well, you can see when we dump 100 points, form a low, that's when a lot of people are like, yep, we're going to reverse right now, right here. And they never wait for the low data to get taken out one more time. This is the secret to being a good trader. If you wait for that low to be taken out one more time, which keep in mind it might not be, and that's okay. If you wait for that and then take the fair value gap after the low swept one more time, which this would be your manipulation leg, that is your Enigma setup. That's like a really good setup. And you can see it works just beautifully here. So do you see the difference? I'm like, what you're longing is this. You're longing this fair value gap here. But you want to try to long, let me delete this. You want to try to long this fair value gap here after we sweep one more low, after we sweep sell side. So do you see the difference? And that's where good trade can be different from a bad trade. So again, pretty good. All right. So let me go over another one. They have to be very easily spottable. I do not spot any good. Okay, maybe this actually. This one, same thing. This one, we sweep low of day one more time. After this low day, I already swept this low day. Okay, so we sweep kind of this sell side. Sweep it here. That first fair value gap we get up right here after sweeping this low day fails. Oh, but what do you notice? The next fair value gap we get after sweeping low day one more time, which is severe manipulation leg, we get an inverse, a bearish fair value gap that turns into an inverse in fair value gap, which breaks above and takes us to the next high, making it for a nice TP. Do you see the difference? Again, I'll go over some more examples. Okay. So we have our kind of major liquidity here. It's definitely more obvious. Like it's obvious liquidity. We kind of got structure in between. This is kind of an old obvious liquidity. We get it, we sweep it, we form a bearish gap. We form a bearish gap right here. Oh, but price just completely rams through it and it fails. Here's your manipulation, like us manipulating over the high that already took on another high, and then we dump after. So do you see the difference? And this one, you actually probably could have entered off of this inversion gap because this is kind of like a death candle to me where it's a very high probability to go lower. But that's the difference, all right? Now, this is an example that does fail, which is all right, but it's the same concept. This low, we've already taken out this sell side right here. We get a low, and you do not want to long this. You do not want to long that first inversion for a value gap. It does not make sense. Wait for a manipulation leg. We get our manipulation leg here. We sweep the low again, and then you might see this inversion, and you might take this. However, this would have been a loss, and that's okay. That just means your bias is probably wrong. And you can see later it was wrong, and we kept dumping. All right, but let me go over some more examples. All right. So this one, this high sweeps this major high right here to the left. And this one is actually interesting. So this one, we actually don't get a gap here. But let's say we did get a bearish gap here. All right, let's say you got a bearish gap here and people shorted it. Well, they would lose on it. Now is when you take the short after we sweep again one more time, because this would be your manipulation leg, and then you look for a short after that. See the difference? And you can see we never, ever, ever, ever go back to the high. So your stop would have been above the high, and then you would have targeted lower. So you can see we just don't go back above the high. This one, we do not get a manipulation leg. We form a big low here. The manipulation leg only would have been true if we kind of go below this, but we never did. So there's no manipulation leg here. Therefore, I would not have taken a trade. Perfect example right here. Right here. This low sweeps this major low. Now the first fair value gap up we got completely fails, and then we go hit the low day one more time. All right, and then that's when the long setup occurs. You can kind of see it actually never gave an entry, but you see after the manipulation leg, it works nicely, and we go up a pretty decent amount all the way to this high, which is an intermediate term high inside of a fair value gap. Which this is a little ICT gem, but remember, this is the sell side of the curve, all right? This is the sell side of the curve, all right? So where do people place their stop losses on the sell side of the curve? Well, where they shorted. Where might you short? A fair value gap. So people who shorted here, who did not get out of their position here, are going to have stop losses up here, which means the market's going to target them, all right? So that's that. Now, again, you can see how important the manipulation leg is. So what I'm thinking a lot of time is this. I'm thinking, okay, we swept the low here. Here's our first fair value gap. I don't want to take it. There's not really any manipulation leg. I'm going to pass this one for now. So I play some candles. Okay, this still seems pretty bearish. Nothing bullish yet. Still not bullish here. Still kind of bearish. Still kind of bearish. Still kind of bearish. Oh, okay. We got a manipulation leg. And in live time, my brain's like, oh, we barely displaced below its low. This is definitely a bullish signature in price. We got a gap. I'm now going to long this gap because it's a bullish signature in price, and I'll target the high. Like, that's what I'm thinking in live time. It's not like you're going to know that this is a manipulation leg in live time until we get the setup that shows it's a manipulation leg. That's like a really important part of trading. So you can see how important the manipulation leg is. You don't always have to use one, but it's definitely better if you wait for one just in case. And ideally, the manipulation leg is mainly used after we dump or pump 100 points or something. We dump really fast, and then that when we hit that major objective that you've been waiting for, that you finally took profit for, I'd never trust the first setup back up. This usually fails. You want to wait for that second setup back up. So you want to wait for another sweep below day, and then you want to go long. All right, you don't want to go long here. This is just not high probability. So that is the manipulation leg. Use it, and that's it for this video. Peace.